Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Cna Financial Corporation Annual Report. Cna Financial Corporation offers a wide range of commercial property and casualty insurance products to various clients across the United States and internationally. The company's services can be broadly categorized into several key areas. Firstly, Cna provides professional liability coverages and risk management services to professional firms such as architects, real estate agents, accounting and law firms, among others. This includes directors and officers, errors and omissions, employment practices, fiduciary and fidelity and cyber coverages for small and mid-size firms, public and privately held firms, and not-for-profit organizations. In addition to these services, Cna also offers property insurance products such as marine, boiler, and machinery coverage. The company's casualty insurance products include workers' compensation, general and product liability, commercial auto, umbrella, and excess and surplus coverages. Furthermore, Cna provides specialized loss-sensitive insurance programs and total risk management services. This includes surety and fidelity bonds, warranty and alternative risks products, as well as run-off long-term care policies. The company's comprehensive range of services makes it a leading provider in the commercial property and casualty insurance market. Cna Financial Corp's stock price has increased slightly over the past year due to several key news events. The company reported record financial results for full year 2025, with a net income of $1,278 million and core income of $1,342 million. This strong performance was driven by growth in net written premiums, improved investment income, and decreased catastrophe losses. Additionally, Cna Financial took several shareholder-friendly actions, including increasing its regular quarterly dividend to $0.48 per share and declaring a special dividend of $2 per share. The company also optimized its debt profile through strategic debt management, issuing $500 million in new notes while repaying $500 million of existing senior notes. While some fourth-quarter metrics missed analyst estimates, the overall full-year performance provided a strong foundation for the stock's positive movement. As a result, Cna Financial's stock price experienced a 5.98% change over the past year and a 5.63% increase in 2026 alone. Cna Financial Corporation maintains a market capitalization of $13 billion, broadly in line with the industry peer group. Cna Financial Corporation trades at a higher price-to-earnings ratio of 13 times and a lower price-to-book ratio of 1.14 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The company exhibits a very high leverage profile, with liabilities accounting for 84% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 3.93%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through an analysis of the key financial metrics. On the growth side, net earned premiums, non-insurance warranty revenue, and other revenues have all contributed positively to revenue growth. The specialty segment has also seen significant growth, with a $23 million increase in 2025 compared to 2024. Additionally, the property and casualty segment has experienced substantial growth, with a $190 million increase in 2025. However, there are also several drivers of revenue decline. Non-insurance warranty revenue and other revenues have both declined, while the commercial segment has seen a significant decrease in revenue. Net unrealized losses and investment valuation differences have also had a negative impact on revenue. Furthermore, catastrophe losses and unfavorable net prior year loss reserve development were major factors contributing to the decline in net income in 2024. In summary, the growth of net earned premiums, specialty segments, and property and casualty segment has driven revenue growth, while non-insurance warranty revenue, commercial segment, and investment valuation differences have contributed to revenue decline. The company's financial performance indicates a consistent generation of positive operating cash flow. For the year 2025, the net cash provided by operating activities reached $2,490 million, demonstrating a strong ability to generate cash from its core business operations. This trend is also evident in the previous year, 2024, where the company generated $2,571 million in net cash from operating activities. These figures suggest that the company's financial health is stable, and it has sufficient resources to meet its obligations and invest in growth opportunities. The company's debt level has undergone significant changes. Initially, the estimated fair value of debt in 2025 was projected to increase from $43.694 billion to $46.3 billion. However, this trend is not consistent across all reports. On page 52, it is stated that long-term debt increased from $2,885 million to $2,967 million, indicating a slight rise. Furthermore, the total debt in 2025 was reported to be $3,838 million on page 46, which represents an increase of $1,187 million, or 2.7% compared to previous estimates. In terms of interest expenses, there is no significant change observed. The interest expense for 2025 remains at $135 million, as stated in pages 29 and 41. Although page 45 mentions that the interest expense increased due to higher corporate debt, it does not provide specific numbers to support this claim. Overall, while the company's debt level has seen some fluctuations, its interest expenses have remained relatively stable. The performance of various segments within the company was uneven. The life and group segment struggled, primarily due to its long-term care business being in a state of decline. This decline is likely a result of the business no longer generating new revenue, as it has reached the end of its operational life cycle. Similarly, the corporate and other segment also underperformed. This segment's poor performance can be attributed to the inclusion of corporate expenses and legacy businesses that are no longer viable. These factors have contributed to the overall decline in this segment's performance. The company's management is cautious about its future prospects due to intense competition from industry peers and potential market declines affecting fixed maturity securities. To mitigate these risks, the company has implemented a strong cybersecurity strategy, although it acknowledges that it may not be sufficient to cover all potential losses. Management is focused on optimizing returns relative to liabilities and liquidity needs, taking into account various factors such as interest rates, tax regulations, asset class valuations, and economic conditions. The company aims to maximize long-term returns with a prudent level of risk through a total return approach, investing in equity securities, limited partnerships, and fixed maturity securities. While there is no clear statement on the company's overall strategy or outlook, management emphasizes its commitment to responding to trends in the business and prioritizing risk mitigation. This suggests that the company is taking a proactive approach to navigating the challenges it faces, with a focus on adaptability and prudence. The company has a history of rewarding its shareholders through various means. One way it has done this is by paying dividends, which indicates that the company has generated sufficient profits to distribute a portion of them back to its investors. This practice not only benefits existing shareholders, but also sends a positive signal about the company's financial health. In addition to paying dividends, the company has also been actively buying back shares from the market. Share buybacks can be an effective way for companies to return value to their shareholders and boost their stock prices. By reducing the number of outstanding shares, the company can increase earnings per share, making its stock more attractive to investors. That concludes the financial summary for Cna Financial Corporation. Feel free to comment below, and I will be happy to answer them when possible.